Hi there, welcome to Kneppy Invest and welcome to September 9, 2024. With about 1 hour and 30 minutes left of normal trading, plus the 10-minute closing auction. And today hasn't gone as badly as I thought it might have, particularly after the Friday night session in the United States. And also the XO actually did begin the day pretty badly, down about 1% on open. It's recovered a little bit, regained much of the loss, and is only down 0.46% right now. Small caps a little bit worse day, but that's to be expected these days. Seems like everyone is selling the small cap companies and buying bigger companies, maybe de-risking, that sort of thing. And resources, finally, after having a few pretty bad days last week, is only down 0.24%. The agenda for today's video, fairly similar than other videos. We'll have a look at the best and worst performing indices, sectors, and companies on the ASX. A few interesting announcements have been released today. Not many, but just a few. Company did release a trading update. This is Premier Investments. In fact, Premier Investments will be releasing their financial results towards the end of the month. They did give us a date, if I remember correctly, and I could be completely wrong, 25th of September. For some reason, that date is popping up in my mind. A few other fund managers release their funds under management, and I do have to discuss Global Data Center. I haven't come up with the number 5 stock of the day. However, there was a proposed acquisition, Charter Hall Retail, proposing to acquire hotel property investments. But I've just seen that at 10:09 a.m., Hotel Property Investments intends to reject CQR host plus takeover offer. So I might have a look at that. Steadfast is in the trading halt. I've just seen that. That's interesting. Might have a look at that. Why are they in trading halt? Maybe an acquisition. Don't know. Maybe there's some bad news. DTI Group contract award. A Narada brain injury program, GLP studies, further update. Doesn't sound that interesting. And share price has not really moved. Okay, so let's get into the ASX today. See what have been the best performing sectors in the indices. Have to go to market index. And yeah, as I mentioned, a nice little recovery today because the market did open down a fair bit. In fact, all indices look like they have recovered a bit. No, actually, that's wrong. I was going to say at one point today, looks like the XTX was almost flat, but no, that's completely wrong. So let's have a look at the best performing and worst performing sectors. Real estate has had a really good day today. No idea why. It could be just because bonds are falling. Don't know. So I'm assuming Guzman Group's had a pretty good day. Utilities, almost flat, but up a little bit. Staples, flat. And every other sector is down. And discretionaries had the worst day, down 1.21%. I'm wondering if that has anything to do with Premier Investments. Don't know. It's not that big of a company. But let's have a look at why consumer discretionary is the worst performing sector today. Let's have a look at the companies in it by market cap, and they're all down. Premier Investments is only down by 4.62%, but maybe a little bit of negativity within that company. Super Retail is down big, 7.41%. Has that company gone ex-dividend? That's interesting. So let's have a look at Super Retail Group. I didn't notice anything untoward for that company. Oh, they've just gone ex-dividend. 87 cents dividend, and the share price is down by more than that. So that's probably has not really helped the discretionary sector today. And I've also noticed Guzman Gomez up 4.91% to $40.39. We all thought at $30 this company was significantly overvalued. Even at the IPO price, I think it was $20 or $25. Even then, it looked really overvalued. So what is it now? At a market cap of $4.1 billion, and it's barely profitable. So obviously the market is thinking this company is going to go significant in the future, and it better because it will be overvalued. Yeah, there we go. Levis down big as well. Bit of negative sentiment in that company. So quite a few companies within the consumer discretionary down. I'm not sure if I put Wesfarmers in this lot, or even Aristocrat. I'm not sure I'd call those two companies consumer discretionary, but that's just me. Okay, so let's have a look at the different indices, and I'm having a look for gold. Gold down 2%, so performing a little bit worse than the rest of the mining sectors. I'm assuming maybe iron ore's had an okay day today, uranium's had a bounce, that sort of thing. And we often see this. Gold is its own thing. When the rest of mining companies do bad, gold sometimes does pretty good. When other mining companies do well, gold does worse. It's all over the place when it comes to gold versus other mining companies. Okay, so let's have a look at the best and worst performing companies. We'll have a look at the top gainers, see if any company has had a good day today, and I didn't realize it would have a good day. Now, we can totally bypass Cavalier Resources, up 41.41% on $4,900 of trading. A markup of the company is $6 million. Ignite, up 22.39% on no turnover. That turnover is probably like 5 cents. Let's have a look. It's probably one trade for one share, and yeah, one trade for one share of 8.2 cents. That's why I've seen this now a few times. That's why in the turnover it's blank. There's no number there because it's cents. So one share traded. So let's move on to the next one. And in fact, the rest of the best performing companies are on fairly low turnover, except Satire, up another 14.33%. So it looks like with Dean Mintz buying some shares on market, that has really pushed up the share price. So the market is thinking, well, he knows something. He knows something about this performance of this company, and it's a buy. Although, in saying that, Adacel Technologies up 18.2%, and that is potential number 5 stock of the day. I might talk about that company because they did actually release something, and I've just noticed that company there. So thankfully, my brain is working. Otherwise, nothing else of interest. PointsBet up 11.8%. Pretty good turnover there as well. I don't remember that company releasing anything though. So let's have a look by market cap. Says Guzman Gomez. And ARB's had a pretty good day today. Gentrack, $10. Go Gentrack. Bought that company many years ago on this was like probably late 2020, and I had to hold shares in that company for the longest time before it broke out. Botanics, pretty good day. There's Hotel Property Investments, takeover bid for that company by Charter Hall Retail, up 6.61%. And Catapult's in this list as well. Go Catapult. And there's Appen. So a few interesting companies in this. Biome's another pretty good day for that company. Might have a look at a few of these charts moving forward because I don't know which ones. Let's have a look at Catapult, and we'll have a look at Biome. And what else can we have a look at? We'll have a look at Hotel Property Investments as well. And Gentrack. Why not? Few interesting companies within this list. Okay, so let's have a look at the worst performing companies on the ASX today. MacArthur Minerals, fairly low turnover, so we can move on there. Just like Australasian Metals, companies I've never heard of before. Far Northern Resources, Augustus Minerals, Native Mineral Resources, Litchfield Minerals, Moshio. Now, a few of those companies I have heard of, but they're all fairly small. Most of those companies have markup below $10 million. And the one that doesn't, MacArthur Minerals, has a markup of 10.98 million. So what we're doing is looking for companies of interest that might have released something today, and I'm seeing nothing here. Most of these companies are fairly small. So the biggest company here is Omni Bridgeway, which is a law company. I have no interest in law companies. So that company has a markup of 259.27 million. Now, I should be a little bit less biased. So even though I might not like law companies, just going to have a look at the chart for this company. And no interest in that. So let's just move on to the market cap portion of this part of the video. Steadfast down. Okay, I was thinking maybe Steadfast went to trading halt because probably should have a look at Steadfast. So now I have 6 companies to choose from for my top 5 stocks today. I might combine 2 of them. I don't know yet. But for some reason, Steadfast share price is down, and they went into trading halt. So there's a potential they did receive a query from the ASX, or maybe there's loose lips, and we'll see when we look at the trading halt. So definitely, Steadfast is going to be my top 5. Super Retail, Lovisa, Codan. I wonder if some of these companies have gone. We already know Super Retail has gone ex-dividend. I'm wondering if Lovisa, although Lovisa wouldn't have that high of a dividend. No, they're going ex-dividend on the 13th, so just a bit of negative sentiment in this company. I wonder if Codan. Now, Codan is correlated to gold prices, so possibly that's the reason it's down, but fairly big drop for Codan, particularly when you look at the chart. Codan is a nice, or has been a nice looking chart. Wonder if it still is. Let's have a look. That's still a nice looking chart. No reason to get nervous about this just yet. If I was trading it, other companies here, we have Vulcan Energy. I'm gonna have a look at Vulcan Energy chart as well. And then there's global data center down 7.12%. MedAdvisor, have to look at MedAdvisor. Someone said to me quite a few months ago, "Oh, you should be trading MedAdvisor. It's a really good chart." And I'm happy to see the share price of that company down because the chart doesn't look good anymore. So I'm not happy for shareholders, but I'm happy that whoever recommended it, I should buy it. In fact, I think the person said I'm crazy not to be trading MedAdvisor, and that was near the top. So that's why I wanted to have a look at it. And there's Money Me down. Well, it's getting maybe 10 cents is still on offer if it drops to that level. Okay, so let's get to the top 5 stocks of the day, and we'll start off with. I have not. What I might do is I'm going to put the 2 companies that released their funds under management as at number 5. I'll put Premium Investments at number 1. We'll put Global Data Center at number 2. We'll put Adacel at number 4 and Steadfast at number 3. So let's have a look at these 2 companies that did release their funds under management. And in fact, they released it towards the beginning of the day. And hopefully ComSec updates. There it goes. Yeah, so one thing I have not talked about, that Westpac has a new CEO. His name is Anthony Miller. So if you're the sort of investor who makes investment decisions based off the management, maybe Anthony Miller is a big deal. I've never heard of Anthony Miller. I have a feeling he's been with the bank for a while. Wouldn't be surprised. In fact, let's open it up to see. I don't know why I have that reason. Mr. Miller, currently CEO of Westpac's Business and Wealth Division, will succeed Peter King, who will retire after a 30-year career at Westpac, including 5 years at CEO. Just the very fact that Anthony Miller was a CEO of Westpac's Business and Wealth makes me think he might be a Westpac man, or he's been with this. No, down below we see here, prior to joining Westpac, Mr. Miller was Deutsche Bank's CEO of Australia, New Zealand, and co-head of Investment Bank. He also spent 16 years at Goldman Sachs. I'm trying to see where he joined Westpac in 2020, so he's definitely not a Westpac man. He's only been with the company for 4 years. But he does have a nice little history there. Nice broad history, Goldman Sachs, Deutsche Bank, and then to Westpac. Otherwise, don't know anything about Anthony Miller. And how's the share price gone today? Down 0.69%. Mount Gibson also released resources and up 0.98%. Anyway, the 2 companies that did release their funds under management were GQG and Platinum, and a little bit different for both companies. So let's start off with the more positive one. GQG, share price up 2.42%. Not surprising. I'm not surprised by this move at all because the share price had fallen a fair bit over the last month. And I was like, why? Not sure what market was saying, why the company was being sold off. A nice dividend yield, and they're growing. If I compare this to other fund managers, I would be really focused on this one because just valuation. If you don't have a look at the PE ratio, there could be some reason behind it because I'm not a big expert in these sort of companies. In fact, I'm not a big expert in any company, really. A PE ratio of 13.37. And then you have a look at their funds under management. And I was like, okay. All right, so everything's moving up. Everything's increasing. So 31st of July, total funds under management, 156.3 million. Now it's 160.8 million. It's a nice increase. In fact, so far for this year, they've had net inflows of $15.2 billion. Yes, $15.2 billion. This company is still growing. And this is one of the things I would look for. If I started to see, if I was a holder of this company and I started to see GQG, funds under management, starting to decline, that's when I'd be a little bit concerned. But they're still increasing. Maybe you might be looking for slowdown in increases of funds under management. So not surprising to see the share price a little bit higher for this company. So let's just have a look at the chart for GQG. And you notice, the share price dipped back. So maybe this is a buy the dip situation, and now the share price will go on a run. I'll get rid of this number here. And I'll get rid of this little it was a resistance level. It broke through that resistance level many, many months ago. And the other company was Platinum. Now, I've already mentioned there was a little bit of difference between the two companies. I think I did. And I mentioned this one was the most positive, GQG. So let's have a look at the one that's a little bit negative. And this is not a surprise. This is not a shock. Share price down 1.1%. Funds under management for August. So what we're looking for here is funds under management increasing. And for Platinum, we've had another decrease. Funds under management dropped by 331 million. You see the funds under management dropped a fair bit from 13.03 billion to 12.22 billion. So that could be underperformance in the funds because outflows were a little bit lower than that total drop in funds under management. That figure also includes net outflows from Platinum Trust funds of approximately 288 million. Interesting, the most recent investment performance of funds managed by Platinum can be found at this link. Let's have a look at this link. A lot of negatives there. There's heaps of negatives. They do a lot of funds, and they're all negative for the last month. For the last year, a few good performing funds here. Platinum International Technology Fund up 20%. P class, the C class is up 19.8%, and the International Health Sciences Fund has also performed well. But most of the funds here have performed pretty badly. Anyway, I didn't know this existed until they provided us that link. Anyway, so share price is down 1%. And so have a look at this chart for GQG. Now let's have a look at the chart for Platinum. Completely different. You can't get any more different than this. In fact, Platinum Asset share price has been in a downtrend for a long time. And in fact, today share price has gone to a record, maybe not an all-time low, but a long-term low. This is the definition of a downtrend. This is the definition of a company you just don't want to own at this point in time. Probably. Now, it's up to you. If you want to own this company, it's up to you. The share price is falling. Funds management are dropping. They have to show signs of turning things around. But the decision is up to you. If you want to buy shares in this company, go ahead. It's up to you. Let's have a look at the weekly chart. And the weekly chart looks pretty ugly too. In fact, the share price of Platinum Asset Management moved to a downtrend in early 2018 when the share price was $6, or around $6. Now it's 92 cents. If we go back even further, this would have been a bit of a, I'm not sure if it would have been classified as a market darling back in 2013-14, but there was a bit of excitement in this company. The share price went to $9.50. So in fact, the share price of this company has dropped 90% in the last 10 years. And yes, the share price of this fund manager is at a record low. And do whatever you want. But why did volume just go there? Oh, there it goes. Just look at the chart. That's all I'm going to say when it comes to this company. Just look at the chart. So it's Platinum Management, and the company with the T code and the name that I can never get right. I always want to say QGQ, but it's actually GQG. I just wish they had a better name, or easy to pronounce name for me. So those are the companies coming in number 5. I always actually do look at funds under management. In fact, did Magellan Financial Group release their funds under management recently? Yes, they did on the 5th of this. That's right, I remember that now. Yeah, I remember. Memory just come back. Now onto Adacel Technologies, up 17.1%. So there is potential. This could have belonged a bit further up the top 5 stocks of the day, maybe even number 1. They did release an announcement in regards to FA contract for tower simulation system support update. So you just get what this company does within this announcement. They do flight simulations, or even tower simulations. There we go. I've always thought of this company as a flight simulation. So maybe it's more tower simulations. Let's have a look what they do. I love when companies put in their about session that they are a publicly traded company. Thank you for that clarification. I just did not realize that. I'm being a bit facetious there. The company plays a significant role in global airspace safety. There you go. A world leader in its industry, Adacel applies cutting-edge technologies to develop advanced air traffic control simulation. Yeah, air traffic control simulations, yeah, and training systems, and state-of-the-art air traffic management solutions. So not whatever I said. flight simulation, air traffic control simulation. So you would expect their total addressable market is fairly small, so fairly niche sector here, or whatever they're doing, fairly niche. And I'll be honest with you, the company hasn't really succeeded. And we'll see that. Look at the chart, and that will really really be able to say that this company really hasn't succeeded. They did. I'm pretty sure they had a relationship with FAA, and then their relationship faded away, and then it came back. I can't quite remember. This is going back many, many years, and this is in regards to, what does it say here? In September 2024, the FAA rendered its decision in the revaluation of the proposals and concluded that Adacel remains the awardees. So there must have been some sort of dispute about that. As a consequence, Adacel will continue to deliver under the contract terms, which begin on 1st December 2023. The company is pleased, obviously they are, with this decision by the FAA, and confirms the significance of the Tower Simulation System program. Valued at $59 million over 5 years, this contract encompasses a comprehensive range of services connected with existing installed network of tower simulation systems. There we go. So the market likes that. So let's have a look at the chart. For Adacel, pretty small company. Let's say about $80 million market cap. No, it says 33.5. Really? That seems low. No, it says 39 here. Yeah, with the increase, 40 million. But if you have a look at the chart, and we'll have a look at the weekly chart. So there's no breakout here. I am looking for breakouts. No breakout here. But if you have a look at the weekly chart, so I'm just thinking that the share price drop in 2018 was in regards to the FAA. In fact, that would have been the week of 5th of November 2018. And back in 2015, this was a market darling. Share price went from 30 cents all the way up to a high of 350. So that's an over a 10 bagger in a fairly short period of time. And then you can just see by the chart that even though this was a market darling, that didn't last very long. And then something happened in November 2018. And I'm going to have a look what happened then. So let's go back in time. So we're talking about, I'm just going to click here, violently click. Whoops, I went too far. What was it, November 2018? Whoops, I went the wrong way. There we go. Oh, I'd say the share price dropped because of financial year 2019 earnings guidance was pretty negative. But I'm pretty sure something happened back there where they lost the FA contract and then it came back. I can't quite remember. It's not a company I followed too closely, to be honest with you. But right now, share price has popped up. And yeah. So congratulations to shareholders. Maybe now's the time to sell. But it's up to you. It's your decision. It's your money. You make decisions yourself. Coming in at number 3, we have Steadfast. This is going to be interesting because I have no idea what's happening here. All I know is they've got the share price has dropped. I don't think they have, and indicated price is down even more. Something is going on here. I doubt they went ex-dividend. They went ex-dividend 1 week ago. Share price has dropped. Volume 3.3 million. It's not high volume, so it can't be a volume query from the ASX. So let's have a look at the trading halt at 11:24 a.m. Now, I'm going to have a look at the chart first. I just want to see if the share price just suddenly dropped or if it dropped on open. If we saw a sudden drop at some point, now this dropped on open and just collapsed. There was selling pressure on open, significant amount of selling pressure on open. Initial thoughts was this was a price query from the ASX. So let's have a look at the trading halt. It could be something negative that they didn't release to the market, and there was whispers out there. Maybe that is what happened. So very exciting here to see what's happened here. Okay. The trading halt is necessary as Steadfast expects to make an announcement to the ASX in connection with an ABC article published today. Well, there we go. That's why the share price dropped on open. ABC released an article, probably quite negative, on Steadfast. Let's have a look. Steadfast, ABC. ACC chairs cause ban for... Okay. ACCC chair calls for ban on strata insurance commissions as insurance giant Steadfast Group called misleading clients. Okay, everything's clear now. There is a reason for the drop. Has to do with this article from ABC. Good work, ABC. Well, I shouldn't say that because who knows if there's truth in it. But I do like this sort of journalism, particularly if companies are performing or acting badly. I'm wondering if AUB Group has dropped as well. Yeah, that probably explains AUB Group's drop as well. Understandable. Bit of nervousness out there. Don't forget, the market hates risk. Market absolutely hates risk. Now let's have a look at chart for Steadfast. So this could be an overreaction from the market. We don't know at this point in time. That's why the share price has dropped. We just don't know. This could be an underreaction from the market. Maybe things are going to go from this little announcement to something really bad in the future for Steadfast Group. So a lot of people, what they do on this sort of news, that sort of article, they just sell first, ask questions later. And that is probably what has happened today. Chart was looking interesting, sort of. Not my favorite looking chart. Share price really doing nothing the last 2 months after a nice little rise in share price. And now we've had that drop today. So interesting. Steadfast was not on my radar this morning. And then, yeah, a few things I did see, maybe interested, the drop in share price and also the trading halt. Coming in at number 2, we have GDC. This is an interesting one. So AirTrunk has been sold. Global Data Center had a portion of that. Share price is down 7%. So I actually did sell out of this company when I saw the share price rally the other day. And I just thought, I'm not sure what this company is going to do. They had a few assets. They're selling their assets. I'm not sure what assets they have right now. And I have a feeling that's what the rest of the market is thinking as well. Now, they do get from this divestment of AirTrunk, they do get, as an investor in the MAM-led consortium, GDC's proceeds from the transaction are anticipated to be $123 million, equating to $1.59. GDC intends to distribute the proceeds available from the transaction to security holders after closing. I have no interest in that. I have no interest in return to capital. No interest in that because they return the capital to the shareholders and the share price will drop by that exact amount. In fact, there is potential the share price will drop even further than that. So this is after being in this situation before. When I see a company going to release a significant portion of their funds or their capital back to shareholders, I get out. I don't need those funds because it's not, you don't get it for free. You see a likewise drop in your capital. So you get this money and likewise drop in your capital. It's not a free lunch. Don't let it fool you. It's not free. GDC tends to distribute the proceeds, blah, blah, blah. No decision has been made as to the future operations of Global Data Center following the distribution of proceeds available from the transaction and from the sale of its other assets. And that's my whole point. I have no idea what this company is going to do. That is why I sold out when I saw that they were selling AirTrunk. Now, I want to try to refrain from saying what companies I'm buying and selling. Try to remain a little bit more not transparent. The opposite of it's not the opposite of transparent. I want to remain as unbiased when I talk about companies. And the main reason behind that is there is potential that at least a few of you viewers will see or hear my enthusiasm of a company and make a decision to buy that company based off that. And I don't want that to happen. So I'm going to try to refrain talking about companies I do own. And if I do own companies, I want to remain as unbiased as possible. It is hard because naturally enough, when you do own a company, you're going to be a little more excited about the company. Anyway, let's have a look at GDC. So I did set out of Global Data Center on this little pop, and that's actually it's turned out to be a pretty good decision. So not quite 350, but it was a little pop, and now the share price is 326. And the main reason, I just don't have any idea what this company's going to do. No idea. And that's my main reason for getting out. No idea. So that's our Global Data Center. Coming in at number 1 or number 2, Premier Investments. I just noticed here the market is up. It's only down 0.3%. So a pretty nice day for the ASX. Let's have a look at Premier Investments. They did release a trading update. Share price down 4%. I love trading updates. So whenever I see a trading update in the news flow of the morning, I do get a little bit excited. Well, it's not true. I don't get that excited, but I do like a trading update. And what I'm looking for here is positive trading updates and then a breakout, my favorite sort of a day. Okay. Now, so this company reports on a little bit different cycle than the rest of the ASX. So they have to report their numbers by the end of September. So they will be releasing their results on the 25th of September. I did get that right. I thought it was 25th. So that's 16, 2.5 weeks from now, 2 weeks and 2 days from now. Now, they've also mentioned here the global retail sales. These are not audited, by the way, unaudited, but you don't think there's going to be much difference from the unaudited to the audited. So retail sales of 1.6 billion and EBIT, depending which one you look at, post AASB 341, pre AASB 326. Just use the one, please. We don't need confusion. The trading update excludes any results from its investment portfolio. So this company does own a fair bit of Breville, and I'm pretty sure they own a fair bit of Myer as well, maybe a few others as well, but definitely Breville and Myer. I do like Premier Investments for one reason. Well, actually, it's two reasons: Smiggle and Peter Alexander. And there is talk of Premier Retail or Premier Investments spinning off both of those. If I remember correctly, January 2025 for Smiggle and later in 2025 for Peter Alexander. I would love to own, particularly Peter Alexander, as a standalone business. And I do think Premier Investments is doing the right thing, spinning those out, because the rest of the company is, in my opinion, is absolute crap. I wouldn't touch it, but definitely Smiggle and Peter Alexander. Well, I should say definitely Peter Alexander and Smiggle on their own, I think are pretty good possible investments for the longer term. Now, the most important thing about this trading update is whether these numbers beat or missed expectations. And I'm pretty sure these were down on last year. I'm pretty sure retail sales were a little bit higher, and I'm pretty sure EBIT was a little bit higher than this. So numbers down a little bit from last year, but we have seen that for a lot of companies, retail companies. But the most important thing is whether these numbers were better or worse than expected. I actually have no idea. Well, you know what I could do? I totally forgot about doing this. So this is Capital Brief. And sometimes you will get a little bit of information from this. So there he is. Global Data Center Group, Future Uncertain. Yep. I'm looking for Premier Investments here. There we go. So Premier, Levisa shares tumble on weaker financial year results. I'm not sure why Levisa's in there, because they released results a while ago. Platinum shares fall after net outflows hit. Yeah. So let's have a Smiggle Managing Director departure. Ooh. And I just want to see if the trading update, if it was a miss. And there's no mention of that. Sometimes in these articles you will see it was a miss. Sometimes you don't. Okay, here we go. E&P retail analyst Philip Kimber said Premier's trading update was in line with market expectations and highlighted that trading conditions across the second half of 2024 were tough. Despite tough trading conditions, we believe that Premier Investments is one of the better positioned Australian discretionary retailers. There you go. Yeah, so not sure why the share price is down. So let's have a look at the chart for Premier Investments. Is this an opportunity? Now, last time I looked at the chart for this company, it actually looked pretty good. It wasn't looking that bad. And this could be a buy the dip situation for Premier Investments. And there has been a little bit of buying today. So share price actually has been lower, so probably down about 6% at one point, but it's a nice looking chart for Premier Investments. Our P ratio is about 20, if I remember correctly. According to TradingView, it's 20.66, dividend yield 3.95. So you are paying a little bit of premium for this company. That's probably why it's named Premier Investments, because you have to pay a premium for Premier Investments. It's a premier investment company. In fact, I would actually have to say that this is one of the worst named companies on the ASX. Yeah, I'm saying that right now. It's the worst named company on the ASX. Premier Investments. Blah. Awful. At least if Smiggle and Peter Alexander are spun out, they'll probably have their own name, which would be good. That is the top 5 stocks of the day. If you disagree with these top 5 stocks, I'd love to hear your opinion. Is there an announcement I completely missed? Probably. I'm going to have a look at some charts now. Let's look at charts. Catapult. So I do listen to a few American sporting podcasts, and on occasion I will hear Catapult mentioned by coaches. In fact, this happened the other day. I won't say what podcast I was listening to, but the coach was mentioning, talking about a player, and when we looked at the Catapult information or the Catapult whatever, and I just love it when they mention Catapult name. So this is or has been a nice looking chart. I'm going to get rid of this number 2. There it is, a beautiful looking chart for Catapult. A nice day today, up 6.25%. So we need to see the share price keep on going up to confirm the share price is still in an uptrend. But this has been a beautiful chart for, well, there's me buying some more shares. They're not nice. Let's get rid of that. This has been a beautiful chart since the middle of 2023, so about or just over 1 year ago. And you could have bought this company for 90 cents, 80 cents. Now it's $2.21. Definitely things are moving in the right direction business-wise for Catapult. And this is a company that has, I suppose, global positioning. Is that a good way to put it? This is a global company. They're in many sports around the world, in many countries around the world. The other thing I like to look at is volume. We have noticed a pickup in volume. You might be able to see that when we look at the weekly chart too. Yeah, there has been a pickup in volume since May of this year. That's another good sign. Now, if you do have a look at the weekly chart, however, so this company has been a yo-yo for a long time, and share price about 230 is a resistance zone for this company. But if it gets above this, we're talking about a like a 7-year high for Catapult. I do think eventually share price will get above this level, but there is a bit of resistance where the share price is right now, just by looking at the weekly chart. Biome share price just keeps on rising. I do like the management of this company. Actually, no, it's not the management. I do like the marketing of this company. They really market themselves. They really sell what they're doing to the investment community, and that has really helped the chart and the share price of this company. Share price up a little bit again today, up about 5%, and another beautiful looking chart for Biome. And just look at the volume. This is another case. Look at the volume over the past year and a bit. This time last year, the share price of this company was 12 cents on pretty low volume. If we go back here, in fact, the share price broke out back in July. But if we go back to September, chart was starting to look good. This is what I'm looking at. And even then, look at the volume starting to increase back in August of last year. Compared to the volume between May and about February of 2022 and 2003, there was no volume. There was no one interested in this company at all. That's why the share price was dropping, was just drifting lower. There was no interest. No one was willing to buy shares. And then you start to see volume increase. You see this spikes in volume. Those are the signs, the first initial signs. And I'm reading about that now in one of the books I'm reading, that I forget what they call it. It was mentioned in one of the books that when you see a bit of a spike in volume, that can be a good sign. I forget what they call. They actually did name it as a certain thing, and that's exactly what we saw. Biome. We started to see the volume, these spikes in volume, back in February, March, and April of 2023, and that could have been the sign that the bottom has been reached and the share price might be taken off. And then we saw volume increase, and the volume has just really expanded the last, we'll say the last 3 months. Volume now on a consistent basis, in fact, I'd say the average volume is about 1 million shares per day. And if we go back to 1 year ago, the average volume shares traded were probably 200,000 a day. If we go back to 2022, average volume was about 100,000 shares a day. So we've gone from 100,000, 200,000 up to about 1 million shares traded a day. So there's interest. And I'd say a lot of what's driving the interest in this company could be fund managers, maybe small cap fund managers. So nice looking chart for Biome. I still wish I bought some shares in this company when I first did a video back in June of last year. Let's have a look at HPI, Hotel Property something, investments. It's not a bad looking chart, huh? Hotel Property Investments, there you go. So a bit of a shift in, I'm not even sure if I have this in any of my watch lists. I probably should. I don't. This is not in any of my watch lists. I'm going to put this into my, I have a buildings watch list. I'm pretty sure, no, I have a REIT watch list. So I'll put this into my REITs. This is a nice looking chart. I have to give credit. Maybe the share price popping up today on this takeover bid is not the catalyst for a breakout, but chart looks pretty nice for hotel property investments. I'm just have a look at quickly at CQR. Just based off a chart, I would probably choose hotel property investments. Much better looking chart than at Charter Hall Retail. Okay, now let's have a look at Gentrack. It hit $10 today. Yay! Yep, $10. Talk about brilliant, beautiful looking charts. Gentrack is that. I am a long-term shareholder of this company, so I will mention that. I've mentioned that numerous times before. On occasion, I have been thinking, oh, maybe I should take profits. And then I've just held back, and those have been really good holdbacks. Really good being patient in these situations, because every single time I've just held back, not selling or taking profits, the share price has popped up. I think last time I was thinking of taking profits back here in April. Share price was drifting low. I was like, oh, maybe now's the time to take profits. And then on the 20th of May, company released something, share price up almost 20% on that day. This is a really good study of being patient, because I initially bought shares in this company way back in late 2020 when the share price, I forget exactly when I bought, but share price was definitely below $2. It was closer to $1, and I had to wait for the longest time. On occasion, it looked like share price was going to break out. In fact, I'll just zoom in. A few times it looked like the share price was trying to break out in June 2021, and then it pulled back in the middle of 2022. Share price went back down to $1 almost, and then all of a sudden it just broke out back in November 2000. I'm pretty sure that's on the results. November 2022. The one thing you don't see here is massive volume coming in, though. Although there has been a little bit of an increase in volume over the last few months. But this is a beautiful looking chart. And at $10, I just don't know. It is expensive, by the way. It says here via TradingView, markup is the price to earnings ratio, PO, is 151. Yeah, maybe. Vulcan Energy. What's happening with this? Oh, this could be a bad day for Vulcan Energy. Share price down. It's probably the best performed lithium company. I'm pretty sure this has something to do with lithium. Maybe it's carbon emission free lithium. So maybe a lot of the greenies and a lot of the green investors love this company just because of that. I would probably say it's not a reason to buy the company. Anyway, share price went on a beautiful run back in March through to May. I was trading this, and then I sold on this day here, 17th of May, and there was a comment. Why did you sell? Oh, you always sell way too soon. And that comment did sort of, maybe rethink. I nearly sold near the top, and I bought back in. I didn't lose much on that trade, if anything at all, but when I sold was a perfect time. So if you do have an opinion that I might sell too soon, sometimes that can backfire on you, and you look like a fool, because this is what happened here. Whoever said that I sold way too soon, I should be more patient. Yeah, I just didn't like how the share price was running up. This reminds me of Drone Shield. When I sold a Drone Shield, I thought I was making a mistake with that too, but very similar setup. And Vulcan has dropped a fair bit. So I sold on that day about $6, $5.40, and now the share price is $3.53. So I haven't even been thinking about buying back into Vulcan. In fact, the chart looks pretty ugly, and I'm not surprised the share price has dropped. And this is a breakdown. It's dropped below resistance area or support area. In fact, if you put a line right here, it's like what do you call it, a descending triangle? Yeah. I don't know those patterns perfectly well. Descending triangle. It's either ascending or descending. I'm pretty sure it's a descending. No, I don't want no descendants. Descending triangle. I've got to spell right. Yeah, it's descending triangle. That's exactly what it looks like. And it's fairly bearish. I'm pretty sure it's bearish. Is bearish? Is descending triangle bullish? Regular descending triangle pattern is commonly considered a bearish chart pattern, or a continuation pattern with a downtrend. Yeah, so as soon as I saw that, it looks like a sort of a descending triangle, and we have seen a break. So that's Vulcan Energy. And finally, MedAdvisor. Yeah, so quite a few comments have made me think because, in my opinion, there's a lot more smarter people out there than me. And maybe it's just sometimes I consider myself to be a fraud. And I think that's very healthy sometimes to consider yourself a fraud. Why are people listening to me? That sort of thing. And so when some people mention, oh, you should have bought MedAdvisor, you should have sold that, or blah, blah, blah. I should learn just to ignore people, just trust myself because I have done fairly well doing this sort of thing. But, seeds of doubt do get raised on occasion. So someone mentioned to me, I should be trading MedAdvisor. This is a beautiful looking chart. I went, oh, it does look nice. But the thing that held me back from MedAdvisor is I thought the market was getting too excited about the quarterly results. That's why the share price ran up, because this company is cyclical. And usually their March quarter, maybe it's a June quarter, tend to be significantly better than the other quarters. And I had a feeling that this was happened this year. That's why the share price ran up. The company had a really good quarter, and the market got excited, and now the market has come to realization, oh, maybe not. So share price has dropped a fair bit from 58 cents down to 33.5 cents, and share price just keeps on dropping. So this is an ugly looking chart right now for MedAdvisor. So just beware sometimes that if a company does have a really good quarter, just beware there could be cyclicality, reasons behind that. So let's have a look. I'm just going to show you this. MedAdvisor. By the way, this company has a fairly large valuation. What is it? I'd say about 250 million now. I could be wrong. 184, so it has dropped a fair bit. Just going to get rid of that. So MedAdvisor, I'm pretty sure they were profitable, inaugural profit. Yeah, that's good. So they are moving in the right direction. But a lot of people, what we'll do is that one. So it must be the March quarter. Here we go. So if you looked at the March quarter in isolation, you'd go, wow, this company is, well, it's not their March quarter. It's one of the quarters. Which quarter is it? Because they were operating cash flow negative that quarter. No, it's not that quarter either. Must be the December quarter. So let's go back one. Does that make sense? When did the share price start going higher? It started going higher, yeah, in January when they released their quarter results. Yeah, okay, that makes sense. So this is their December quarter results. Yeah, they were operating cash flow positive in this particular quarter by 15.2 million. I have no doubt people saw that and went, wow, this company is the best company in history, the cheapest company in history. Operating cash flow positive, 15.2 million. They were operating cash flow negative the last two quarters. But they were, if we do actually have a look at their most recent quarterly results, won't open up the annual reports because it's too big. We can see if they were operating cash flow positive for the whole quarter, because that 15 million is a fair bit. And they were operating cash flow positive by 5.4 million for this particular year. Now that's operating cash flow. Were they free cash flow positive? Yes, they were. This company is free cash flow positive. Just looking at releases. Yeah. So the company did generate cash flow, positive cash flow. Now, the other thing I like to look at is, I'm going to go back to last year's, so July 2023. And I just want to have a look at this, but I'm going to compare quarter on quarter or even year on year here. And I can do that by looking at the two June quarter quarterly results, or Appendix 4Cs. So remember, the company was operating cash flow positive for the full year and the quarter. Now, 1 year ago in this particular year, they have transitioned from being cash flow negative to cash flow positive. Yes, we can confirm that. Just comparing financial year 23 to financial year 24. But I'm pretty sure their really good December quarter this year was sort of fairly similar than their really good quarter 1 year ago. Does that make sense? Yeah. But again, the whole reason the share price started to pop up was that really good December quarter. And I think maybe the market, some portions of the market didn't realize this company has a lot of cyclicality, and that December quarter is really, really good. They get a lot of their cash flow, a lot of receipts in that one quarter. So that's MedAdvisor. In fact, I just want to see if that happens. Oh, it sort of happened in 2023, but then the share price pulled back. It looks like the market was, the share price was rising on the thought that, yeah, the company's going to have release a really good quarter. And then when the numbers were released, sell. But completely different happenings this time. Anyway, that's MedAdvisor. Otherwise, if the company was cheaper than 180 million, I'd be interested in MedAdvisor. If the chart wasn't looking like this, by the way. Anyway, that's all I have for this particular video. For those who did leave comments, a few nice comments from you. Yeah. So thank you for all those who released comments. I'll talk about some of these comments in another video, not today. Anyway, if you have any questions, any thoughts, leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.